everybody, it's Stuart Smith from SmallCapVoice.com, and I'm joined by the great minds, the young minds, and the full heads of hair from the team at Supermassive. And we've got Jay Rab. What's up, Jay? And Demetrius Thurston, as well as Kevin Gray. So guys, I want to use a dirty word today. The word is dilution. And I think a lot of times when we talk dilution, if you've been in this industry and on this landscape long enough, you know that sometimes it's a necessary evil. Stocks are thinly traded. They're traded by appointment. They don't have enough volume. They don't have enough in the public float. Thereby, dilution can allow them to raise some funds as well as liquidity in their stock. However, it's how that's done that can be, well, it can open up a Pandora's box. So let's talk about it today. Let's start with you, Demetrius. What are your thoughts?
So when it comes to long-term investing, like pretty much more than a year, like you're kind of looking to hold it for at least 2 to 5 years, I think that dilution can be really beneficial to the company. It allows for the company to have more cash on hand to allow them to whether lower their borrow fees from any banks or start funding R&D and just kind of grow the company a lot more. It definitely allows for more growth, I think, is the major thing. Even though in the short term, it might hurt the share price.
Yeah. Well, let's get some counterpoints and some thoughts that may agree with you or may be contrary to what you were just talking about. Jay, what do you think?
Well, I'm on Twitter a lot, and I'm noticing that it's a real big factor for a lot of these investors, especially those in the OTC. They're viewing this may be a potential red flag. And so they really want to see where this dilution is right as it happens, because you'll sometimes have news and then the dilution will kind of be tucked under the rug. And so they're using bots like OTC updates that give just a quick shot of, hey, this is the value that it is now, and this is the update to it. And so they're kind of wary of that aspect of it. But
yeah, absolutely. What do you say to that, Demetrius?
I fully understand. I've been on that like end of the news notification before, where you find out a company is diluting, and then you pull up your portfolio and see that they might have dropped quite a bit. And whenever I'm in like a trade, for example, where it's kind of like a short-term technical analysis based, it certainly hurts. But for my long-term holds, these are companies I truly believe in. And typically it's for funding the actual purpose of the company, whether that's funding new studies, being able to have more money to actually produce more of their products, just grow the business.
Yeah, and I think there's a lot of misnomers and misconceptions from new investors, microcap investors that may be new to investing, that think, okay, these guys are pulling their salaries out of the stock in the market. And that can be the case because a lot of CEOs forego a salary in form of cash to keep their monthly burn rate down. And therefore, once a year, twice a year, at some point, they strike out into the market. I think dilution has different meanings actually as well for stocks that are above $5 and stocks that trade below $5, and even stocks that trade below $1. Your true micro caps, a lot of times we've seen, not just investors, but as well as some of the writers, some of the blog posts that will use those types of maneuvers as fodder for negative posts to try to bash the stock. And then on the other side, you got people trying to promote the stock who are saying, whoa, we've got a low monthly burn rate. You got to check this out. That's why we have a little bit of dilution come January 1st, December 31st. Kevin, what's your take on this?
Well, I think a lot of it has to do with the public perception of dilution. And perception, I mean, obviously in the investment game, perception is always going to be reality. What I believe as a shareholder is going to be how I'm going to make my decisions. And so when it comes to dilution, it's going to depend on the company that we're dealing with and whether or not that company has a track record of transparency towards their shareholders.
Yeah.
Like in a lot of regards, yeah, dilution sucks. And I'll be very direct. It's less about watching a share price drop and more about watching my personal level of ownership in an investment drop. Because if we're adding more shares into the float, at the end of the day, my percentage of ownership is lower. My commitment to the company is lower in both a literal and a figurative sense. And so there's a lot of issues that I do have with dilution. The biggest issue, of course, is that kind of what Demetrius is saying. These companies don't tell us why this is happening. A lot of times they run into compliance issues, and I understand that. But imagine if a lot of these companies took the initiative and actually said, hey, we're going to have to raise the float a bit. And in doing so, we're going to be able to launch this new product, or we're going to be able to launch this new division of our company. But we need to take some money down to do that. Imagine if we could actually have that level of transparency. Like, yeah, there's going to be a little bit more volatility, but at the same time, what's better? Destroying your public image as a company on social media by having all these investors angry at you because it's just endless dilution and the bots are just reporting it while the company's going silent. That'll never make sense to me. And it's one of the reasons why we, as a marketing agency, when we actually respond to shareholders regarding dilution inquiries, we'll directly tell them that a lot of companies use dilution to pay salaries, launch new initiatives, launch new products. Whether or not that perception finally reaches the shareholder, it's really going to be dependent on that individual shareholder. But personally, on the OTC market, dilution to me, it's a pretty bad word solely because of how it's handled by these companies. If they handled it much better, they'd be more successful with it.
And
well,
ultimately,
so much to unpack there. I'm sorry, go ahead, Jay.
Ultimately, I think that's why these tools were designed, is that because that lack of transparency or the ability to be transparent in that regards is why these traders are wanting these tools, because they want to keep the companies accountable. If they have that accountability, then dilution's not going to be an issue for them because they're going to see the value in it. And that's really the issue, is that when you have the dilution, they don't see the value because the companies aren't saying anything.
Well, that's a great point too. And I think, Kevin, you bring up something. I mean, as the much elder statesman here, we've been doing this 25 years at SmallCapVoice.com. We allow them the opportunity to not just do it in print, but to come on and talk and tell us why. And a lot of times I think they need a translator to some extent to go from the CEO speak to the investor's ears, because people receive a message differently than what its intent is. We all bring our own personal baggage into these conversations. Our investing experience in this case leads us to a certain assumption, and that CEO may trigger something there, but see, that's what Supermassive can help with. That's what SmallCapVoice can help with. And again, these aren't sales pitches. That's not what these roundtables are really about, but clearly you've struck on something that it has shocked me. You know, we do quite a bit of quarterly work. We do quite a bit of work for companies month in and month out who say, we don't want to do investor relations, but we want to come on every 3 months and speak to our shareholders, or once a month and speak to our shareholders, which we're fine with. That's one of our favorite things to do, is the webcasting side of it. And also to answer those follow-up questions from their shareholders, even to play the role of devil's advocate for them, to be their therapist if need be, to sort of, you know, not to patronize their point of views, but to tell them, hey, you're not the first to feel this way, and here's why you're maybe not as in dire straits that you think you are. Demetrius, any closing thoughts?
I think that we've touched on both Kevin and Jay that transparency is one of the biggest things that needs to happen when it comes to dilution, in a way that is as compliant as possible. Like there are many situations where you can't directly say, but I think like knowing how often a company is diluting, like if this is a reoccurring issue, like they're just burning cash flow, so like constantly diluting, or if it's a company that you really believe in, you're really looking at it, it might even offer you an ability to like dollar cost average. If you're not just jumping in a lot, putting all your eggs in one basket immediately, but you're kind of slowly investing more with the company over time.
Jay, anything else?
I think that hits it right on the nail, is that if people are transparent with their dilution, then these tools become a helpful thing and a positive thing as opposed to being negative.
I love it. Kevin?
I'd say that the biggest thing regarding dilution is focusing on a personal trading journey, because the biggest way to catch wind of what's happening with these companies is social media bots. We see them all over Twitter. We see them on StockTwits all the time. and they give great information. But if you're relying on bots, if you're relying on influencers to when you should be buying a position, when you should be shorting a position, etc., you're never going to know when to take down your profits. The same thing's the case with dilution. Having a really good understanding of the intricacies of why a company needs to dilute a stock is going to kind of protect you on the back end. And you're going to be able to understand, make some more educated assumptions in your personal trading journey. Never follow what the group think is doing, because you can make more money kind of sometimes going against the grain.
Yeah, well said. Well, I want to thank everybody for tuning in. I want you to check us out at smallcapvoice.com. Kevin, tell them how to check out and learn more about Supermassive.
Sure. Yeah, it's real simple. It's just supermassive.media. We decided to keep it real easy for everybody. Or, of course, reach out to us on social media. It's at Supermassive Inc. On Twitter. So let us know if you need any help there.
All right. Well, I want to thank everybody for tuning in once again. We will make sure that Jay updates the pillow behind him to a Valentine's Day pillow and gets rid of the Christmas one. And we appreciate him letting us know that he's on Tinder Twitter so often. For Jay, Demetrius, and Kevin, this is Stuart Smith saying thanks so much for tuning in.